Hello, everyone, and welcome to Economic Deep Dives, the podcast that deep dives into key economic drivers of financial markets. This week, we're going to discuss the shaping of a new era in our global economy driven by geopolitical tensions. From full scale invasions to trade wars, geopolitical events are disrupting supply chains and reshaping global trade. But first, Joel, could you please tell us more about what drove us here?
As we can see, the evolution of humankind spiked the last 50 years, and that gave room to the highest economic and technological growth that we have ever experienced. And if you ask me, Barak, in one word how to define it, that would be globalization. We saw a world that evolved around open trade, cooperation, and interconnected markets, which gave room to very efficient supply chains, economies of scale, and countries developing their comparative advantages, which basically means that they can do whatever they are best at. And for instance, let's put a very simple example. Creating one chip would be extremely expensive. But whenever we create a lot and develop a very efficient supply chain based on interconnected countries and open to trade, this cost is close to zero. What do you think about that, Barak?
Well, I completely agree with you, but I believe that globalization defines the past. Fragmentation defines the future. We see a shift towards deglobalization, and this is evident in the slowdown of global trade and escalating risks of trade wars within very fragile supply chains. There is a rising trend in economic protectionism, not just in the US, but also in Europe, in China, everywhere. Is to the extent that I believe it has rendered neoclassical economics much less relevant. As nations today, they prioritize their national security and protection of critical infrastructure over further economic integration. From tariffs to subsidies, the emphasis has shifted from economic efficiency to autonomy.
I would like to interrupt you for a second, and I would like to bring a bit of a fun example that I don't know if you remember or you don't recall the COVID times. I think that was the perfect example of defining a weak supply chain, right? We I don't know if you remember, like, did you rush in order to get toilet paper whenever COVID struck?
I personally was not in the toilet paper war. I was blessed in that, but I have seen videos of Karens in the supermarkets fighting to the death. I'm not sure if anyone actually died in the wars for toilet paper, but we see even an essential good that we took for granted how much of a commodity it can become during a moment of crisis.
Exactly, Barak. I think that these very weak supply chains and seeing how we are going towards this fragmentation really shows that there will be a change in the dynamic and what or how markets are and how do we know them. In order to get a deep dive of this topic, we need to answer the following questions. The first one being, what is driving this fragmentation? Secondly, what is the future of global trade? And thirdly, and I think that the most interesting for our listeners, what are the implications for the financial markets?
So let's deep dive into what's driving today's geopolitical shifts. Because geopolitics have always been important, but today they're redefining financial markets. What has changed? I would say that there are two key factors which stand out. One, the growing vulnerabilities and fragility in our supply chains. And two, given this vulnerability, the rise of strategic sectors like artificial intelligence and energy, which now define a nation's economic competitiveness. So let's begin with the supply chain vulnerabilities. What do you believe has happened after we've seen the COVID-19 pandemic and Russia's invasion of Ukraine taking out key energy supplies or key supplies of basic economic goods?
I think that we can take the semiconductor industry as a very good example. We see a very important industry in our future that is split geographically in all different countries, each of them highly relevant and spread around the world. We see that the design of the chips is made in the US. Some chemicals that are needed are taken from Japan, and we see the production being in Taiwan, but the machines that create the production made in Europe. You can see how vulnerable this is only by seeing all the geopolitical tensions that you're mentioning, and how only by one conflict, for example, China wanting to take over Taiwan, you can disrupt the whole future, or what we perceive as the whole future. Do you agree with that statement?
I completely agree with this. And if you look at it, like the situation is very, very funny. We have the core element that drives our technology infrastructure in a country where China, the West's biggest competitor, claims ownership over Taiwan, but not really, but could invade it at any day. But this defines our lives. So it's really interesting to see how geopolitical tensions are becoming more and more important in today's economy. And that's why we see this surge of economic protectionism with countries, especially like United States, reshoring and diversifying their supply chains through aggressive industrial policies, from massive subsidies like Trump's 500 billion AI investment announcement to tariff threats of upwards of 60% on China. It just reflects a shift towards economic independence and trade fragmentation in the global economy. But let's look at the second big driver of fragmentation. And I believe this is related to the weaponization of energy supply by Russia and the OPEC, along with US restricting all Chinese supplies of chips. This just underscores how in today's global economy, controlling critical sectors defines the balance of power, as access to these resources and sectors is not longer just an economic issue of efficiency. It's a national security concern. Therefore, nations just focus on strengthening their domestic industries by bolstering the key strategic sectors which define global competitiveness. For instance, it is widely accepted that artificial intelligence and information technology are the future drivers of economic productivity and are essentially defining most of the geopolitical tensions. Ultimately, the battle for control over such strategic sectors and industrial policies that help achieve this competitiveness continue to drive further fragmentation in an endless loop where we become more self-sufficient by trading less, by having to become more self-sufficient, and is just creating a new era that will define global trade or the lack of global trade for decades.
From what I understand, one of the most critical points here is protecting sectors. Another very good example could be the 300% tariff that Biden imposed to China on all solar energy goods. I think that this is a key way to do protectionism, impose tariffs. But what are really tariffs and what are they used? There's mainly, or what I see, is mainly three ways or three reasons for imposing such tariffs. The first one being negotiation tools. Everyone is talking about the negotiation tools that Trump is doing by tariffs. So for example, Canada and Mexico, a lot of people, they say that they're just US is only trying to bend them on their will and making them act as how they desire to act on the threat of more tariffs. But I think it's a completely different scenario, for example, in China. I think in China it's about protecting sectors, what you were mentioning, making sure that they are the first ones to arrive to this new technology that is breakthroughs and defines the future. And thirdly, generating revenues, which is a very controversial topic. Trump sold tariffs as a way to generate revenue and promising that it would lead to lower taxes and reduce cost of living in America, right? But in reality, tariffs often push up consumer prices and it leaves people at a worse position rather than better. For example, during 2018, Trump administration tariffs were absorbed by consumers and increased the cost of living by an average of $625, Barack. Do you think that this is a better economy or situation?
Well, to answer if it's a good economy, it depends on the perspective. I mean, look at the multinational companies. I think in general, there's a wide consensus in equity markets that Trump is going to provide good stimulus for the equities, especially US equities. But of course, tariffs and these industrial policies usually come at a loss of consumer surplus. So in general, I think the policies of Trump administration are more favorable towards corporations and oligarchs than consumers. So they're clearly geopolitical winners and losers. And this leads to our new section of downstream implications for financial markets. If I were to look at who are going to be the winners and losers from the dynamics of fragmentation, I would look at the people who benefited from global integration and the people who still have the self-sufficiency to stand their ground in face of deglobalization. So maybe let's start with fragmentation losers. And I think the most obvious agents you'd think of are China and Germany, which are the manufacturing powerhouses of the world that have benefited from loosening trade barriers and exports. We also have economies that lack independence in their infrastructure. So again, think of Germany and its dependence on Russia for energy, or think of Europe and its dependence on US for defense, or China and chips on Taiwan. In general, it is very clear that if you have a dependency in today's global economy, this is a weakness that will be exploited by your competitors. And of course, you can also think of consumers who will be affected, as Joel said, by high inflation and reduced purchasing power. Especially if you look at discretionary companies, they might benefit from the increased industrial surplus, but the lower demand and lower purchasing power of consumers will catch up with these multinational companies.
But wait, Barack, not everything is bad. You're starting to depress me and making me think that this economy is scary. There's also some good news, guys. It might be that economy is capable of autonomy through existing infrastructure, might be in a very good position to develop further. So basically the other way that the economies that profited from global integration, they are losers. So it's the same way. If you are able to be autonomous, this is a huge advantage in such a fragmented market. Secondly, we were also talking about the dependencies. So all these companies that are aligned with these government interests of developing specific sectors, such as the chips, the energy, or the defense, can lead to a lot of returns, because basically the government will create a very attractive environment for them in order to develop, and also with subsidies will give them maybe the economic factors that they are in need. And finally, let's speak about connector economies, which might benefit from supply chain realignments. Could you go a bit deeper on that, on why those connector economies benefit?
Yes, and as to display what or how these connector economies are benefiting from supply chain realignments, let's take Russia invading Ukraine as an example. The trade Russia used to have with Europe has just been rerouted to China and other trade partners. And this has been done through connector economies such as Kazakhstan, which have been transporting and facilitating a lot of trade between these major economies. And then we also have other middlemen between the West and the BRICS. And we see economies, let's say like Mexico, who are willing to import from China and then export to United States. The point is that instead of these economies trading directly, we also have a surge of connector economies who are willing to be the middlemen in rise of these geopolitical tensions. So in conclusion, we believe that fragmentation will lead to winners and losers. So this is the most critical moment in history for investors to select the right geographies and the right sectors to invest in their equities. There will be higher inflation, higher interest rates, reduced global trade. There will be declining consumer purchasing power. And these are all factors that investors need to take into account before distributing their capital.
I completely agree, Barack. And I think that it is the moment where we say some sectors that we might be bullish on, or that we think that are critical for the future of our development. I think that through the podcast, we've emphasized a lot the importance of energy, chips, defense, But it's very important to look at all the different sectors and how these geopolitical tensions will affect them.
I would say that if we could summarize this entire podcast in two sentences, we would like to say that we see economies increasingly prioritizing their economic sovereignty, and this is particularly true in industries that are deemed as strategically important for national security and economic competitiveness. Because in today's fragmented world, it's not about efficiency, it's about autonomy. We hope you enjoyed the first episode of Economic Deep Dives, and if you enjoyed it, please follow us on Spotify and join us next week in our next Economic Deep Dive.